My name's Tim Pezzack and I'm the Regional Director for the South and West Region Business Development Commercial Banking. My team are responsible for switching new businesses and trading businesses from other banks to Lloyds TSB, and as such we provide a range of funding solutions to businesses across all sectors. Managing cash flow in a difficult economic climate can be a real challenge for businesses like yours, and I understand why you'd ask that question. But there are some basic principles that can help see any business through this particular cycle. I would say there are three basic principles that we need to stick to. You could ask yourself, do I have a clearly defined credit policy that's been communicated to the people who buy from me? Do they know what my terms of trade are, and do they know when I want payment? The second thing is, what cash management measures do you have in place? And how do you administer those on a back office basis in a way that doesn't impact on your day-to-day customer service? And finally, what controls have you got in place to review your spending and your investments to make sure you're getting best value? So let's start with that clearly defined credit policy. Do all the customers that deal with you know what you expect of them in terms of payment? Are your invoices clear in terms of settlement dates? And do you have a robust system in place to chase payments if they're late on arriving? Do you offer discounts to customers who settle within the invoice time? And what penalty is there for those that don't? How often do you engage with your customers who are dealing with you on a day-to-day basis to make sure they're staying within those terms? On the other side of the equation, what are you doing to deal with the people that supply you to stretch your payment terms? Have you begun negotiating with people that you have to pay? Is it possible to hold on to your cash longer in your own business and make it work harder for you? The other thing you could look at is what stock lines you're holding. For example, if you've got more than one line in your business, is one of the lines particularly slow compared to the others? If so, how much are you holding in that particular line? Is it tying up cash unnecessarily, which you wouldn't want in these tough economic times? These basic things can help you to manage your cash more effectively. One other thing you can consider is raising money against other assets in the business. You may have already considered invoice finance, but have you considered asset-based finance against other fixed assets in the business? Often these can provide ready sources of available cash. Let's take our second point first of all, employing cash control measures in a way that doesn't impact on our service levels. Avoid poor credit control methods, a basic principle, but it involves making sure that your back office routines are stringent enough that you invoice quickly and you chase late payments. Avoid poor and undetermined marketing campaigns. If you've spent money on advertising and marketing, how do you know what value you're getting? What measures have you got in place to check the value of your investment? And apply the same judgments on these answers to your own suppliers. Are you getting a good service and a good rate from them? Are there alternatives that you could consider to hold on to your cash for longer? So let's move on to our third point, spending and costs. How often do you review the costs of sales within your business? And do you break that down into the individual lines that you supply? You see, some lines will carry a much higher cost than others, and that will allow you to make a value judgment on what is the most profitable line within your business. Do you review your overheads regularly? Do you look at what savings can be made, even in things like staffing costs, banking costs, and other professional services? It's a very competitive marketplace. When was the last time you asked the question? And do you prepare and work to dynamic cash flows? What I mean by that is, do you review them on a weekly basis, even a daily basis? You see, a cash flow document is only useful if it's accurate and up to date, but it can really help you get ahead of the curve and manage your cash flow difficulties more effectively.